I'm going to start with art and gold. Now, both these vehicles have become extremely important. Gold, of course, has been important right through the ages, and it was always used as a store of value. And the importance of gold actually comes from the fact is that earlier, whatever currency that was issued, first gold was itself a form of currency, right? Then it became unwieldy for gold to be used as a form of currency. So what they used to do is you keep the gold in the vaults, on the basis of the gold that you had in your vaults, the amount of currency was issued on the total amount of gold. So gold was actually, the more gold you have, the more rich you were. But as and when time goes, gold was used as a backup in terms of that a certain amount of reserves of gold needed to be kept. So again, even though it was a certain percentage, but at least in the fact that it was a backup that if you wanted to issue currency, so there had to be some percentage of gold that had to be attached to it. So the gold was always important. But in recent times, because earlier after this, that the American dollar, the US dollar is supposed to be the most strong currency, and it is the most widespread currency that is used all over the country. It is widely accepted, and because the US is a very strong economy. But in recent times, the US dollar is not as strong as it used to be. Okay, so in that case, again, gold is made a comeback. In case as a currency, as a backup against a falling US dollar, right? Gold is regarded to be a much safer avenue because again, gold is widely accepted in form that if you want to exchange currency, then gold is accepted, and it is because we all agree that gold is value. Other reasons for gold becoming popular is, one, it is a good hedge against inflation. 3, in oil price crises, when oil price shocks happen, because again the US dollar suffers, again it is important. And third, it is a very useful portfolio strategy, diversification strategy, because it has a low correlation with other major asset classes. Gold does not have a major correlation. It is not a correlation with, let's say, the share market and stuff. Okay, as I said, gold is important. Number one, as a reserve against gold, against the US dollar. 2, as a commodity by itself, because gold is scarce. The production of gold is now, in recent times, there are limited mines and stuff, so the production of gold itself is suffering. And there is a latent demand for gold, for jewelry and stuff. So for its own use as a commodity, right, it is generally regarded to be a safe commodity. Right? It's a good store of value. At times, of course, crises during geopolitical considerations, when you have war, etc. Again, gold is widely accepted. And as I said, the last reason is because the correlation with the markets is rather low. Right? So if the stock markets do not do well, you can still invest in gold, because gold will not suffer that much in value, because the degree of correlation with the stock markets is low. In fact, what happens is, if the stock markets are not doing well, people will generally invest in gold, because it's a stable store. You may not get huge returns or great returns, but it's a safe form of return, because it always manages to beat inflation. Right? There is a consistent demand and supply for this. Right? So because of those considerations, the value of gold generally, it's always on a rising trend. It's not going to grow. You get a lot of capital appreciation, but yes, as a store of value, as a generally safe asset, gold has its value. The recent innovation that has happened in gold ETFs, right? You would have heard of Kotak and UTI coming up with gold ETFs. Now, what it works is that normally you invest in gold, you put it as your safe deposit, right? And right after a certain point of time, when you need it for your sons or your daughter's marriage, and then you go to the jeweler and. Okay. Now, number one, the gold that you're buying from the jeweler, you don't know what quality it is, right? And whenever you decide to go and convert it to the jewelry, he will always subtract some of the other profit. Right? So it's not pure in that sense. Okay. Now, in this case, what happens is that you don't have to invest in gold. Right? You invest in a gold fund like any other mutual fund. The person with the gold fund will invest in gold, will keep it in there. Right? For example, when you invest in shares, right? Now you don't get physical shares. Right? It is you invest in a DP. There is evidence that you have invested in shares. Right? The physical shares are not physical. It's just evidence that you hold shares in your demat statement that you have shares. But do you have a physical copy of the shares? No, you don't. Right? Similarly, in this, in a gold ETF, you invest in units of gold. Right? So suppose, let's say the price of gold is, let's say, 10,000 rupees. Right? So let's say you invest, 1,000 units. So at the rate of your NAV of whatever it is, 10 rupees. Right? Now the gold prices increases to 15,000. Right? So in that case, what is your NAV going to become? 15. Right? So as the value of gold goes up, the value of your investment goes up. At a certain point of time when you want to redeem, either you redeem in terms of money, or there is a provision that you can actually exchange it for gold. Right? So that if you want gold in there, so you will get your gold bars or something, and then this is how to gold. But you don't have to physically invest in gold. So the whole hassle of investing in gold, keeping in your safe locker, getting with impurities, right? And whatever is the price of gold in terms of demand and supply, that is free. So that is an innovation that is in terms of gold. Okay. Now the other investment category, which is again made a huge gain, is basically art and antiques. Okay. Today you heard of MF Hussain, you heard of so many other people, which probably I don't know, but I would say Anjali Menon, and so many other Jatintas, and there are too many to be named at this point in time. But this investment category has become extremely important because the possibility of appreciation is immense. Now the only thing is that to invest in this category you need lots of money, right? Because these investment categories are not cheap. Right? Any painting that you go and buy, or any antique, maybe slightly cheaper, but it's a painting, I think it's going to be less than 1 lakh or 2 lakhs. Right? It is not for the small investing. So there is a possibility of capital investing, but you have to be very careful of what you are buying. For example, if you are painting, so what kind of painting? There may be a classical, there may be which age is in, what kind of medium does he use, right? What is his recent artworks, and there is something called an appraisal or evaluation of art, right? Which has to be done properly. Right? Now, here in this case, it depends whether I understand art or I don't understand art. Right? Now, there will be a lot of people who say, okay, this is the value of this is the value of this. So you can't just say that, okay, you're getting, you have to get it appraised, and by a proper appraiser who knows about art. Until unless you don't do that, right, you may just end up losing a lot of money because you don't know whether the quality is good or not, or whether the painter will do well or not. Right? So there is return, but there is also high risk. Right? Secondly, even with antiques, right, you have to know whether they are fake or whether it's a genuine piece, right? As if we got good references. Is the artist comfortable with the medium? What is his works have they been sold as well? What prices have they been sold? What is the market for these art and antiques? Right? And there are regular auctions. There is a lot of information nowadays on websites, art galleries. There are a lot of auctions that are taking place. So there are some real estate valuers, art valuers as well, for art and antiques as well. So, you have to take into account all these considerations, and you need to know about it, right? Simply just going by tips and saying that, okay, this is a good piece, right? You need to have an appreciation of it. You need to understand it. Only then you should invest in it. Right? Like you have gold funds, you have art funds also. Right? But again, those art funds are not for the retail investor, because the amount of investment that you need for those art funds is a huge amount. You have oceans, you have yatra. So there are some art funds which have come in and which have made reasonably good returns. So that is another investment category that you need. And whenever you are investing in art and antiques, right, you have to ensure that they are insured. You have to get a certificate from your art dealer that they are genuine. Right? They have to make some provisions for safekeeping and ensure that they are not damaged. Right? The lighting, the storage, etc. Because those things are also important for maintaining the value of art and antiques. So those considerations are important for art and antiques, but as I said, they are not for small investors. They are okay for big ticket investors who have money to spare and who understand art. Right? Only for those class of investors does it become a feasible option to invest in art. Right? It is high risk, and it is also could be possibly high return. It is also speculative because You may be advised some investment for some paid term, and possibly you may find that you've invested in it and you go out to sell it. He may actually not come out the value that you have paid for it. And so unless you really understand it, it would be really difficult to invest in mathematics. That is about mathematics.